Given the bullish price forecast for Bitcoin, and the current price hovering near support, a long-term investment strategy appears promising. Price history shows consistent upward movement, indicating a strong underlying trend. The forecast suggests continued growth, with prices potentially reaching the resistance level. Therefore, a long position at the entry price of $67,500 is recommended. This price point offers a balance between potential upside and risk mitigation. A stop loss at $66,600 protects against significant downside movements, while the target price of $69,000 aligns with the resistance level and allows for substantial profit potential. This strategy capitalizes on the bullish momentum while managing risk effectively. Ethereum shows a mixed price trend over the past 2 weeks. While there are periods of growth, the overall direction seems to be downwards. The forecast indicates further decline in the coming week, suggesting a bearish outlook in the short term. Considering the current price is close to the support level of $2,370.47 and the forecast predicts a drop below this level, a short position appears to be the most suitable strategy to capitalize on the anticipated decline. An aggressive short-term investment strategy would involve entering a short position at the current price of around $2,530. The stop loss should be set slightly above the current price at $2,560 to mitigate potential losses from an unexpected price reversal. Target price would be set at $2,370, aligning with the support level and the forecast's lowest predicted price. This strategy aims to profit from the anticipated downward movement of Ethereum in the short term. The current price of Ripple is hovering around $0.53. The historical price data shows a consolidation pattern, with prices fluctuating within a range. The forecast price indicates a downward trend over the next week, suggesting potential for further decline. Considering the bearish outlook and the forecast, a short position in Ripple seems more suitable. To implement this strategy, an entry price of $0.53 could be considered, aligning with the current market price. The stop loss should be placed at $0.547, slightly above the recent high, to minimize potential losses if the price unexpectedly reverses. The target price could be set at $0.485, aligning with the support price, allowing for a decent profit margin while capitalizing on the anticipated downward movement. This strategy focuses on a short-term investment perspective, aiming to capitalize on the potential price decline in the coming week. Given the price trends and forecast for Solana, a moderately aggressive investment strategy would focus on a short to medium-term approach to capitalize on the expected price increase. The historical prices show a generally upward trajectory, with the current price near the support level of $159.83 and the forecast suggesting a rise towards $176 over the next week. The resistance is at $177.36, indicating potential for further upside movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price of $165 would allow you to buy in at a relatively attractive price point, while the stop loss should be set at $159 to protect against any unexpected price drops. The target price should be set at $175, aiming to capture a significant portion of the anticipated price increase. This strategy balances risk and reward, allowing you to potentially profit from the upward momentum of Solana, while mitigating potential losses. Given the downward trend in Cardano's price history, and the forecast predicting further declines, a short-term bearish strategy is recommended. The entry price should be set at $0.347, slightly above the current price, allowing for a small buffer against immediate price fluctuations. The stop loss should be placed at $0.351 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.322, aligning with the lowest forecasted price and taking advantage of the anticipated decline. This strategy focuses on capitalizing on the short-term bearish momentum in Cardano by entering a short position at a slightly elevated price, setting a tight stop loss, and targeting a realistic profit level. Investors can aim to minimize risk while maximizing potential returns in this volatile market environment. Given the price trends and forecast for SU coin, a cautious investment strategy focusing on a short-term approach is recommended. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The current price is hovering near the support level of $0.7852, suggesting a potential for further downside movement. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $2.05 aligns with the forecasted price and offers a reasonable entry point. The stop loss should be set at $2.13 to protect against any unexpected price recovery, while the target price should be set at $1.90, allowing you to take profits before the price reaches the support level. This strategy aims to mitigate risk while maximizing potential gains from the anticipated short-term price decline. Based on the provided price history and forecast for Filecoin, a cautious investment strategy leaning towards the short term seems most appropriate. The historical price data shows a fluctuating trend with no clear upward or downward momentum. The forecast indicates a slight decline in price over the next week, suggesting a potential bearish sentiment. Considering this, a short position on Filecoin could be considered. An entry price around $3.65, slightly above the current price, allows for some room to accommodate potential price fluctuations. A stop loss at $3.77, slightly above the recent high, would limit potential losses. The target price could be set at $3.45, aligning with the forecasted price decline and providing a reasonable profit target. This strategy aims to capitalize on the anticipated price dip while mitigating potential risks through a well-defined stop loss. Given the price trends and forecast for Theta network, a cautious investment strategy would focus on a short-term approach to navigate the anticipated price decline. The historical prices show a fluctuating trend with a recent downward movement, and the forecast suggests further declines. The support price at $0.947 indicates a potential floor for the price, while the resistance at $1.188 suggests limited upside potential. Therefore, a short position is advisable to capitalize on the potential for a price decrease. An aggressive entry price could be around $1.26, aligning with the recent price action and slightly above the predicted lowest price. A stop loss should be set at $1.3, protecting against any unexpected price recovery. The target price could be set at $1.1, aiming to capture a significant portion of the anticipated decline before reaching the support level. This strategy allows for potential profit while managing risk within a short-term time frame. Given the provided historical price data and forecast for Dogwifhat, a short-term bearish strategy appears more suitable. The 2-week price change reveals a downward trend, and the forecast suggests further declines in the coming week. While the current price is close to the support level, the resistance is significantly higher, indicating limited potential for a significant upward move. Therefore, capitalizing on this anticipated decline presents a more compelling opportunity. An entry price of $2.55 would allow you to enter a short position at a relatively attractive price, aligning with the forecasted price. Setting a stop loss at $2.67, above the current price, would protect against any unexpected upward price movement. The target price should be set at $2.40, slightly above the forecasted lowest price, allowing you to secure profits before the market potentially reaches major support. This strategy aims to take advantage of the short-term bearish momentum in Dogwifhat while managing risk effectively. Based on the provided information for Stellar, a cautious short-term investment strategy seems appropriate. The 2-week price change shows a slight upward trend, but the forecast indicates a potential decline over the next week. The price is currently near its recent resistance level of $0.0973, suggesting a possible pullback. Entering a short position at the current market price of around $0.0967 allows for potential profit from a downward price movement. To manage risk, a stop-loss order should be placed at $0.0973 above the current price, to limit potential losses if the price unexpectedly surges. The target price could be set at $0.0945, aligning with the forecast's lowest price point. This approach aims to capitalize on the potential short-term decline while minimizing risk through a well-defined stop-loss order. Based on the provided price history and forecast for Starknet, a short-term investment strategy appears to be the most prudent approach. Price history reveals a downward trend, with the forecast projecting further declines. The historical prices show a consistent downward trajectory, and the forecast suggests a continued decline in the coming week. This bearish outlook indicates that a short position would be more suitable for capitalizing on the anticipated price drop. An optimal entry price for a short position would be around $0.403, aligning with the recent price action and the downward trend. The stop loss should be set at $0.424, slightly above the recent high to minimize the risk of unexpected price reversals. The target price could be set at $0.357, which represents a significant downside potential based on the forecast and aligns with the lower end of the historical price range. This strategy aims to profit from the expected decline in Starknet price over the short term. Given the price trends and forecast for PENDLE, a moderately aggressive investment strategy would focus on a medium-term approach. The historical prices show a volatile but generally upward trend, with the current price hovering near the support level. The forecast suggests a slight upward movement in the short term, but with some potential for consolidation. This indicates a sideways to slightly bullish outlook in the medium term. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price around $4.60 would allow you to buy in at a relatively attractive price point, while the stop loss should be set at $4.19 to protect against any unexpected price drops. The target price could be set at $5.00, taking advantage of the potential for a price increase towards the resistance level. This strategy allows for a balance between risk and reward, aiming to capture a moderate profit within a medium-term time frame. Based on the provided information about render, a bearish investment strategy is recommended for the short term. The 2-week price history shows a downward trend, and the forecast indicates further declines in the coming week. Price is currently near the resistance level of $4.751, suggesting a potential for a pullback. The support level of $4.478 provides a potential floor for the price decline. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of around $5.23. The stop loss should be placed at $5.46, the highest recent price, to limit potential losses. The target price should be set at $4.56, slightly above the support level, aiming to capture a portion of the anticipated price decline. This strategy capitalizes on the bearish sentiment and potential for a pullback in render's price. Given the price trends and forecast for VeChain, a cautious investment strategy would focus on a short-term approach. The historical prices show a volatile pattern, with recent dips indicating potential short-term bearishness, while the forecast suggests a slight decline in the coming week. The support price at $0.01998 presents a potential buying opportunity. Therefore, a long position is recommended with an entry price around $0.0217, slightly above the current price and below the resistance level. The stop loss should be set at $0.0200 to protect against further downside movement. The target price could be set at $0.0235, aiming to capitalize on a potential rebound towards the recent highs. This strategy allows for potential profits in a short-term bullish trend, while minimizing risk by setting a clear stop-loss level. Given the price trends and forecast for Binance Coin, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering around the support level of $570.8. Forecast indicates a continued downward trend in the coming week, suggesting a bearish outlook. While there is potential for a short-term rebound, the overall price action points towards a decline. Therefore, a short position on Binance Coin is advisable for a short-term investment strategy. An entry price around $578, slightly above the current support level, would allow for some room for price fluctuation before entering the short position. The stop loss should be set at $585, limiting potential losses if the price unexpectedly rises. Target price could be set at $565, aiming to capture a portion of the potential downward movement predicted by the forecast. This strategy allows for a balanced approach, acknowledging the potential for short-term volatility while capitalizing on the prevailing bearish sentiment. Given the price trends and forecast for Conflux, a cautious investment strategy would focus on a short-term approach. The historical prices show a clear downward trend, with the current price close to its forecast and near the support level of $0.132. The resistance is at $0.148, indicating that a significant upward movement is unlikely in the near term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. A conservative investment strategy would involve entering a short position at $0.145, aligning with the resistance level and allowing for some room for price fluctuations. The stop loss should be set at $0.152, slightly above the entry price, to protect against unexpected upward movements. The target price should be set at $0.135, aiming to capture a decent portion of the potential price decline before reaching the support level. This strategy acknowledges the bearish outlook in the short term while managing risk effectively. The historical price of Worldcoin shows a fluctuating trend with both upward and downward movements. While the recent price has experienced a decline, the forecast suggests a slight rebound in the coming week. Considering this, a short-term investment strategy with a long position appears to be suitable. An entry price of $2.25 aligns with the current price and the forecast's initial upward movement. The stop loss should be set at $2.15 to limit potential losses if the price drops below the forecast's lowest point. The target price can be set at $2.37, which represents a potential upside based on the forecast's highest point. This strategy allows for capitalizing on the anticipated rebound while managing risk effectively. Based on the provided Avalanche price data, a cautious investment strategy is recommended. The 2-week price history shows a general downward trend, with the forecast predicting further declines. Although the support price is at $23.49, the current price is already below this level, indicating potential for further losses. The resistance price at $26.95 suggests that a significant upward movement is unlikely in the near future. Considering these factors, a short position on Avalanche is advisable for a short-term investment horizon. An entry price of $25.50, slightly above the current price, would allow for some buffer against potential short-term fluctuations. The stop loss should be set at $26.50, limiting potential losses if the price unexpectedly rises. The target price can be set at $24.00, aiming to capture a modest profit from the anticipated price decline. This strategy prioritizes risk management and seeks to capitalize on the current bearish sentiment surrounding Avalanche. Based on the provided data for Jupiter, a medium-term investment strategy appears to be the most suitable approach. The price history demonstrates a clear upward trend, albeit with some fluctuations. The forecast also suggests continued growth, reaching prices above the current level. The support price at $0.9133 acts as a strong base, indicating a potential buying opportunity if the price dips. Considering this, a long position in Jupiter is recommended. An ideal entry price would be around $0.95, slightly below the current price, allowing for a margin of safety. A stop-loss order should be placed at $0.9133, the support level, to limit potential losses. The target price could be set at $1.06, aligning with the highest recent price point and reflecting the optimistic forecast. This strategy aims to capitalize on the upward momentum of Jupiter over the next few weeks while mitigating risk through a well-defined stop-loss order. Based on the provided price information for EOS, the historical price data reveals a volatile trend with no clear upward or downward momentum. The forecast, however, suggests a continued downward trajectory over the next week. This bearish outlook, coupled with the absence of strong support levels, indicates that a short position might be more suitable for capitalizing on potential price declines. An aggressive short-term investment strategy could involve entering a short position at the current price of approximately $0.475. The stop loss should be placed slightly above the current price, around $0.485, to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.438. Aligning with the lowest historical price and the forecasted price decline. This strategy aims to take advantage of the anticipated downward movement in EOS while managing risk through a well-defined stop-loss. Based on the provided data for TRON, the 2-week price history reveals a slight downward trend. The forecast suggests this downward momentum might continue, with prices potentially dipping slightly over the next week. The support price at $0.1605 indicates a potential floor for the price, while the resistance at $0.1627 suggests an upper limit for the near term. Given this outlook, a short-term short position strategy appears to be the most suitable. To execute this strategy, we would enter a short position at the current market price, which is around $0.162. The stop loss would be placed slightly above the current price at $0.163 to minimize risk in case of an unexpected price surge. The target price would be set at $0.160, aiming to capitalize on the potential price decline towards the support level. This strategy leverages the anticipated short-term weakness in TRON, while managing risk through a well-defined stop loss. Given the historical price data and the 1-week forecast for SE, the investment strategy suggests a short-term bearish approach. Price history shows a downward trend, and the forecast indicates further declines. The current price is close to the support level, suggesting a potential bounce, but the overall trend and the forecast point towards a continued downward movement. Therefore, a short position is recommended, aiming to profit from the anticipated price decline. An entry price of $0.435, slightly above the current price, allows for a small buffer while capturing the potential downward movement. The stop loss should be set at $0.453, near the recent high, to limit potential losses if the price unexpectedly rebounds. The target price can be set at $0.367, aligning with the historical low, providing a significant profit margin if the forecast holds true. This strategy capitalizes on the short short-term bearish outlook for SE while managing risk through a well-defined stop-loss. Based on the provided Shiba Inu price history and forecast, a cautious investment strategy focusing on the short term appears appropriate. The recent price history shows some fluctuation, but generally lacks a clear upward or downward trend. The forecast suggests a slight decline in the coming week, indicating a potential for short-term profit. Therefore, a short position is recommended for a short-term investment strategy. An entry price of $0.000180 aligns with the current price and the forecast. A stop-loss should be set at $0.000185 to limit potential losses if the price unexpectedly rises. The target price could be $0.000175, aiming to capture potential profit from the predicted price decline. This strategy aims to capitalize on the short-term bearish outlook, while managing risk through a well-defined stop-loss. Given the price trends and forecast for Dogecoin, a medium-term investment strategy appears most suitable. The historical prices show a fluctuating pattern with an overall upward trend. The current price is near the support level of $0.1152, suggesting a potential buying opportunity. The forecast indicates a slight upward movement in the coming week, with prices potentially reaching $0.141. Therefore, a long position is recommended to capitalize on this potential upward momentum. The entry price should be set at $0.115, slightly above the support level, allowing for a margin of safety. The stop loss should be placed at $0.111, below the support price, to limit potential losses. The target price can be set at $0.14, aiming to capture a significant portion of the forecasted price increase. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Based on the provided hooked protocol data, a short-term bearish investment strategy seems most appropriate. The 2-week price history demonstrates a downward trend, with the forecast indicating further declines. The price has dipped below its recent resistance level and is approaching the support price, suggesting a potential for a pullback. Therefore, a short position on hooked protocol is recommended. An entry price of $0.431, near the current price, would be suitable. A stop-loss order should be placed at $0.456, slightly above the recent resistance level, to limit potential losses if the price unexpectedly rises. The target price should be set at $0.381, aligning with historical low and providing a reasonable profit margin if the bearish forecast proves accurate. This strategy capitalizes on the short-term downward momentum and aims to generate profits within a relatively short time frame. Based on the provided price information for Aevo, a cautious investment strategy leaning towards the short term is recommended. The historical price data reveals a fluctuating trend, with recent prices hovering around the support level of $0.302. The forecast suggests a downward trajectory, indicating a potential for further price declines in the coming week. Given this outlook, entering a short position at $0.349, near the current price and resistance level, could be a viable strategy. A stop-loss order should be placed at $0.361 to limit potential losses if the price unexpectedly surges. The target price could be set at $0.328, aligning with the forecasted lowest price, allowing for profit taking before the price potentially reaches the support level. This strategy aims to capitalize on the anticipated downward momentum, while managing risk through a defined stop-loss order. Based on the provided price history and forecast for Litecoin, a short-term bearish strategy appears most suitable. Price history shows a downward trend over the past 2 weeks, and the forecast predicts further declines in the coming week. The current price is hovering near the resistance level, suggesting a potential for a pullback. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price of approximately $0.00797. The stop loss should be placed at $0.00828, slightly above the recent high, to minimize potential losses. The target price should be set at $0.00655, aligning with the lowest predicted price in the forecast. This strategy aims to capitalize on the anticipated decline in price and exit the position before it potentially rebounds. Based on the provided historical price data and the one-week forecast for Sun Coin, a short-term bearish strategy appears to be the most suitable approach. The historical prices show a clear downward trend over the past 2 weeks, with the forecast suggesting further declines. The forecast prices range from $0.0172 to $0.0153, indicating a significant potential for price decrease. Considering this bearish outlook, an aggressive short-term investment strategy would involve taking a short position on Sun Coin. A suitable entry price would be $0.0178, aligning with the higher end of the forecast. The stop loss should be placed at $0.0183, slightly above the current price, to minimize potential losses if the price unexpectedly rebounds. The target price should be set at $0.0165, a conservative level below the forecast's lowest point, allowing for profit taking before reaching the support price of $0.01057. This strategy capitalizes on the anticipated price decline while managing risk effectively. The provided data for PEEP suggests a bearish outlook in the short term. The 2-week price change demonstrates a downward trend, and the forecast indicates further declines, while the support price sits at $0.0000798. The resistance at $0.0001067 is relatively distant. Given this information, a short position appears to be the most suitable strategy to capitalize on the anticipated price decline. An aggressive short-term investment strategy could involve entering a short position at the current market price, around $0.0000983, with a stop-loss order placed at $1.05 to minimize potential losses. The target price could be set at $0.0000798, aligning with the support level. This strategy aims to profit from a short-term price decline towards the support level, taking advantage of the bearish market sentiment indicated by the price data and forecast. Based on the provided price history and forecast for Sun Coin, a cautious short-term investment strategy appears most suitable. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines over the next week. This suggests a bearish outlook for Sun Coin in the short term. Given this, taking a short position could be profitable. An ideal entry price for this short position would be around $5.20, aligning with the recent price action and the forecasted price decline. To manage risk, a stop-loss order should be placed at $5.30, protecting against unexpected upward price movements. The target price could be set at $4.90, aiming to capture a portion of the anticipated decline. This strategy prioritizes risk management while seeking to capitalize on the perceived bearish momentum in Sun Coin. Based on the provided information for Bitcoin Cash, a short-term investment strategy appears most suitable. Price history shows volatility, but the recent trend suggests consolidation around the $365 range. The forecast indicates a slight downward movement, with prices potentially dipping towards $357. This suggests a cautious approach with a focus on capturing small profits within the short term. Therefore, an investment strategy could involve entering a short position at around $363, aligning with the current price and the potential for a minor decline. A stop-loss order should be placed at $368 to limit potential losses if the price unexpectedly rises. Target price for this short position could be set at $355, aiming to capitalize on the forecast's downward movement. This strategy capitalizes on the anticipated short-term price dip while managing risk through a stop-loss order. The provided data for Chainlink shows a consistent price trend around $11 for the past 2 weeks, with the forecast indicating continued stability in the near future. This suggests a sideways market with limited potential for significant price movements in either direction. Given this outlook, a short-term investment strategy is not recommended as the potential for substantial profits is low. Instead, a long-term investment strategy with a focus on holding Chainlink might be more suitable. Price history shows a strong base around $11, indicating potential for future growth. The support price of $10.53 provides a safety net, while the resistance price of $11.49 suggests there is room for upward movement in the long term. While entering a position now might not yield immediate gains, a long-term hold could capitalize on any future price appreciation. Based on the provided Polkadot price information, a short-term bearish investment strategy appears most suitable. The 2-week price history reveals a fluctuating trend with a slight downward bias. The forecast prices indicate a continued decline over the next week, reaching as low as $3.69. The support price of $3.649 suggests a potential floor for the price, while the resistance at $4.024 indicates a ceiling for upward movement. Considering this outlook, a short position on Polkadot is recommended. A suitable entry price would be around $3.96, aligning with the current price and the downward forecast. The stop loss should be set at $4.024, slightly above the current price and the resistance level, to minimize potential losses if the price unexpectedly rises. The target price could be set at $3.649. The support price, aiming to capture a significant portion of the anticipated decline. This short-term strategy capitalizes on the bearish momentum and seeks to profit from the potential price drop in Polkadot. Given the provided price history, forecast, and support resistance levels for near protocol, a cautious short-term investment strategy appears most suitable. The 2-week price change showcases a downward trend, aligning with the forecast which predicts further declines in the coming week, while the support price at $3.879 provides a potential floor. The forecast suggests a dip below this level, indicating a bearish outlook. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An entry price around $4.68, slightly above the current price and recent lows, allows for a potential margin of safety. The stop loss should be set at $4.85, the highest point in the recent price history, to limit potential losses if the price unexpectedly rebounds. Target price could be set at $4.363. The resistance level, aiming to capture profits before a potential upward correction. This strategy acknowledges the current bearish trend, while incorporating risk management measures to protect against unforeseen market movements. The provided data for stacks suggests a bearish outlook for the short term. The 2-week price change shows a downward trend, and the 1-week forecast indicates further declines, while the historical price data reveals some volatility. The current price is near the resistance level of $1.687, suggesting a potential for a pullback. Therefore, an investment strategy for stacks should focus on a short position in the short term. A suitable entry price would be around $1.76, aligning with the current price and potential for a decline. The stop loss should be set at $1.83 to mitigate risk in case of an unexpected upward movement. The target price could be set at $1.64, slightly above the historical low, allowing for potential profit before reaching major support. This strategy capitalizes on the anticipated downward price movement, while managing risk through a well-defined stop loss. Given the price trends and forecast for Aptos, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the forecast indicating further declines. While the price is currently near its support level of $8.51, the resistance is at $10.38, suggesting limited upward potential in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $9.5 aligns with the current price and the forecasted price, allowing you to enter the trade at a relatively low point. The stop loss should be set at $10.05 to protect against any unexpected price surges. The target price should be set at $8.70, aiming to capture a significant portion of the anticipated decline before reaching the support level. Given the price trends and forecast for Litecoin, a medium-term investment strategy would be suitable. The historical prices show a slight upward trend, with the current price hovering around the support level of $66.19. The forecast indicates a slight downward movement in the coming week, but the overall trend remains positive. This suggests a potential pullback before a further upward move. Therefore, a long position is recommended to capitalize on this potential. An ideal entry price would be around $67.00, slightly above the current price and below the recent resistance of $74.25. The stop loss should be placed at $65.50, protecting against a significant drop below the support level. Target price could be set at $72.00, aiming for a potential upside move in line with historical price highs, and the forecast suggesting a return to the $70 range. Provided price information for Uniswap suggests a potential opportunity for a short-term bearish investment strategy. Although the historical price data shows some volatility, the recent 2-week price change indicates a downward trend. The forecast price further reinforces this bearish outlook, predicting a decline in the coming week. Given this, a short position in Uniswap appears to be the most suitable approach. To implement this strategy, an entry price of $7.85 would be appropriate, aligning with the current price and the forecasted decline. A stop-loss order should be placed at $7.95 to limit potential losses if the price unexpectedly rises. The target price for this trade could be set at $7.50, aiming to capitalize on the anticipated price drop. This strategy focuses on a short-term investment horizon, aiming to profit from the potential downward movement in Uniswap's price within the next week. Given the price trends and forecast for Bittensor, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price hovering near its support level of $320.3. The forecast suggests Bittensor could continue to decline, reaching as low as $507 in the coming weeks. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $544, aligning with the current price, would be suitable. The stop loss should be set at $560.1, slightly above the current price, to protect against any unexpected price recovery. Target price should be set at $507, aligning with the forecasted lowest price, allowing you to take profits before the market hits major support at $320.3. This strategy allows for potential profits from the expected price decline, while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Internet Computer, a short-term investment strategy is recommended. The historical prices show a slight downward trend, and the forecast indicates further declines over the next week. Although the price is close to the support level of $7.028, the resistance is at $7.823, suggesting limited upside potential. Therefore, taking a short position could be profitable. For this strategy, an entry price of $8.00 would be ideal, allowing you to capitalize on the anticipated decline. The stop loss should be set at $8.15 to protect against any unexpected price recovery. The target price should be $7.70, a conservative estimate that allows you to take profits before the market hits major support at $7.028. This strategy aims to profit from the short-term bearish momentum of Internet Computer. Artificial Superintelligence Alliance's price history shows a downtrend over the past 2 weeks, with the forecast indicating further declines. The current price is hovering near the support level of $1.125, suggesting that this level might be tested in the near future. Considering this bearish outlook, a short-term short position is recommended. An entry price of $1.34, slightly above the current price, allows for a small margin of safety while still capturing potential downside movement. The stop loss should be set at $1.41, above the recent high, to protect against any unexpected price rallies. Target price is $1.18, aligning with the forecast's lowest projected price. This strategy aims to capitalize on the anticipated decline in Artificial Superintelligence Alliance's price within a short time frame. Based on the provided data for Optimism, a short-term bearish investment strategy appears most suitable. The 2-week price history demonstrates a fluctuating trend with a slight downward bias, and the forecast predicts further declines over the next week. Price currently sits near the resistance level of $1.606, suggesting a potential for a pullback towards the support level of $1.452. Therefore, a short position on Optimism is recommended. An aggressive entry price could be around $1.60, aligning with the current price near resistance. The stop loss should be set at $1.63, slightly above the entry price to protect against unexpected upward movements. The target price could be set at $1.50, anticipating a decline towards the support level. This strategy aims to capitalize on the anticipated downward price movement in the short term, taking advantage of the bearish signals indicated by the price history and forecast. Given the price trends and forecast for Ethereum Classic, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests Ethereum Classic could drop from its current price near $18 to as low as $17, while the support price sits at $17.3, indicating some potential for a rebound. The bearish outlook in the short term makes a short position more suitable. An aggressive short-term investment strategy would involve entering a short position at $18, aligning with the current price. The stop loss should be set at $18.77, the resistance level, to protect against any unexpected upward movement. The target price should be set at $17.3, slightly above the support price, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the anticipated decline in prices, while mitigating potential losses. Given the Ethereum name service price history and forecast, a cautious short-term investment strategy is recommended. Price has shown some volatility recently, fluctuating between $15 and $19. While the forecast suggests a slight decline in the coming week, it remains within a relatively narrow range. Therefore, a short position is advised with an entry price around $17, aligning with the current price and the forecast. The stop loss should be set at $17.5 to limit potential losses if the price unexpectedly rises. The target price could be set at $16, aiming to capitalize on the predicted decline. This strategy focuses on capturing a small profit from the anticipated price movement, while mitigating risk by setting a tight stop loss. Based on the provided data for Solana name service, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with recent dips below the historical high of $0.268. The forecast suggests a slight upward movement, but the price is expected to remain within a relatively narrow range. Given this outlook, a short-term position allows for potential profit from minor price fluctuations. A long position could be considered if the price decisively breaks above the resistance level of $0.3459. However, for now, a short-term strategy with a focus on capturing small price movements within the current range seems more prudent. An entry price around $0.247 could be considered, with a stop loss set slightly above the recent high of $0.268 to mitigate risk. The target price could be set at $0.232, aligning with a potential downside movement based on the forecast. This strategy aims to capitalize on short-term volatility while minimizing potential losses. Based on the provided information for Aave, a cautious investment strategy is recommended. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines in the coming week, while the support price at $135.27 offers a potential floor. The resistance at $151.25 suggests limited upside potential. Considering these factors, a short position appears more suitable for capitalizing on the anticipated price decrease. An aggressive short-term strategy could involve entering a short position at $149, aligning with the forecast's opening price. The stop loss should be placed at $151.25, slightly above the resistance level, to minimize potential losses if the price unexpectedly rebounds. Target price could be set at $137, aiming to profit from the predicted decline while staying above the support level. This approach allows for potential gains while managing risk effectively. Based on the provided data for Injective, a short-term investment strategy appears most suitable. The recent price history shows a slight upward trend, but the forecast predicts a decline over the next week. Price is currently near the resistance level of $20.43, suggesting a potential for a pullback. Therefore, an aggressive short-term strategy would involve taking a short position on Injective. A suitable entry price would be $20.40, aligning with the resistance level. The stop loss should be set at $21.00 to limit potential losses if the price unexpectedly rises. The target price could be $18.50, capitalizing on the predicted decline, while staying above the support price of $16.25. This strategy aims to profit from the anticipated short-term price correction in Injective. The provided price information for Polygon reveals a downward trend over the past 2 weeks. The forecast also suggests a continued decline in price over the next week, reaching as low as $0.308. Considering this bearish outlook, a short-term investment strategy focusing on a short position seems appropriate. A suitable entry price for this strategy would be $0.365, aligning with the recent price action and allowing for some room for potential price fluctuations before entering the short position. The stop loss should be set at $0.372, slightly above the entry price, to minimize potential losses if the price unexpectedly moves upwards. The target price for this short position could be $0.32, taking advantage of the anticipated price decline and aiming to capture a significant portion of the potential downward movement. This strategy aims to capitalize on the short-term bearish trend in Polygon while managing risk through a well-defined stop-loss order.